Are you going to owe the IRS money for taxes? Did you know that investing in your own business can help lessen your tax burden? My name's Paige Major, and I help multi-passionate entrepreneurs create brands that attract their dream clients by being themselves. In this video, we're going to talk about tax write-offs and why you need to be investing more money into your own business. For those of you that don't know, my business bestie is Annie Miller, and earlier this year we were discussing taxes and how much money she was going to have to pay the IRS. While that is good to be in a higher tax bracket because it means your business is doing better, it also sucks to have to give your hard-earned money to the government. It's also kind of crazy to think about the fact that you could be investing that money in your own business instead. So that business coach that you wanted to hire, that consultant, that money you wanted to spend on advertising and marketing, or even that course that you really wanted but weren't sure if you should spend the money. Spending money on those things is a tax write-off for your business and will lessen the amount of money that you have to pay the following year to the IRS. It's important to understand that I have absolutely no licenses or certifications to speak on this topic. I only have my personal experiences. However, I do have an amazing client named Jaimie, who happens to be a tax goddess and has agreed to be a guest in this video to answer all of our tax questions officially.
My name is Jaimie Eck. I'm a certified public accountant with 25 years of experience helping women-owned small businesses manage their accounting and taxes. I'm a year-round tax partner with my clients. I like to help make sure that they're planning for their taxes as well as minimizing their taxes all year, not just at the end of the year. Today we're going to talk about year-end tax planning, which includes making sure you've paid enough in estimated taxes throughout the year, as well as reducing your tax liability before it's too late. The first tip I'll give you is you want to make sure that you owe less than $1,000 when you file your tax return, otherwise you're going to be hit with penalties and interest, and nobody wants to pay more than they have to pay to the government. So you want to look at where you are at year end, and that means you have to do your bookkeeping. You have to add up all your income, and you have to add up all your expenses, and you have to see where you are with your net income, with your profit. You're going to pay about 30% in taxes, give or take, on your profit. So are you ready to pay that amount? If not, let's get some more business deductions.
How do I know if I need more write-offs?
In order to know if you need more tax deductions, you're going to need to know what your net income is. Your net income is your revenue less all of your business deductions. Your taxes are going to be roughly 20 to 30% of your net income, depending where you live and depending what tax bracket you fall into. And your tax bracket is determined by all of your combined income from all sources. So if you have a job plus business income plus interest and dividend income, stock sales, if your spouse made money as well and you filed jointly, you'll want to add all of that together to come up with your tax bracket and your tax rate. If you want to find out what your tax bracket is in any given year, you can always Google tax bracket and the year that you're looking for, and you'll find lots of sources that list the tax brackets for those years. So once you know where you're at with your profit, if you want to reduce your taxes, you'll have to spend more money on your business before the end of the year. Here's another tip. When you check your tax bracket and you find that you've just crossed over into a higher tax bracket, spend what you need to spend on your business now before year end and drop back down into that lower tax bracket. So if you don't know where you are for the year and the idea of trying to figure it out is really stressing you out, hire a bookkeeper right now before year end and pay up front for their services, and they'll figure it out for you, and you can write that off on your taxes this year.
Is there a guide or list somewhere that actually tells me what counts as a business write-off? I know some things are 100% deductible, while other things can only have a percentage written off. How do I know what's what?
Your cell phone and your car are probably both used for both business and personal purposes, so you have to take the business use percentage for those expenses. And then there's meals. If you have meals with clients or business associates, you can write off 50% of those meals. If you have meals on your own while traveling, you can also write off 50% of those meals, but only while you're traveling. You can't write off meals by yourself when you're just around your hometown. Here's a list of the common business tax deductions that are 100% deductible. Advertising, accounting, professional fees, legal fees, bank fees, business licenses, dues and subscriptions, coaches, contractors, education, equipment purchases, equipment rental, gifts for clients, insurance. interest expense on credit cards used for business purchases, merchant processing fees, payroll expenses, payroll fees, repairs and maintenance, travel, utilities, uniforms if you have to wear a uniform. If you know you'll be spending money on something anyway in the next few months, you might as well do it now before year end, especially things that you might get discounts on for prepaying upfronts, like dues that you pay monthly now. Some people offer discounts if you prepay for a year rather than pay monthly. Some other things to think about are making your fourth quarter state estimated tax payment now instead of January 15th so that you can write off that expense this year rather than wait till next year. Also, renew your business license now if possible rather than waiting until next year.
P.S. Photo and video is 100% a tax write-off for your business.
Another idea is open a solo 401k before December 31st. You'll still have until April 15th to contribute to it, but you do have to open it by December 31st if you want to take advantage of it for the current year. On a personal note, if you want to reduce your taxes, you can donate to charity before year end, or you can also pay for next year's college tuition for your children or your grandchildren and get the tax credit this year for that instead of next year. If you want to learn more, check out my website at www.greentaxescpa.com.
If you like this video, hit that like button and don't forget to subscribe. And in the comments below, let us know if you have any questions. And if you have any friends who own businesses and pay taxes, which is hopefully all of them, then please share this video with them.